Hey, what's going on? It's Lewis here with Cryptolete, and welcome to another Cryptolete market update. Today's date is March 7th, 2022. It is approximately 8:30 a.m., and we are going to be going over the market to see whether it's going up, whether it's going down. It has been quite a turbulent week in the markets. Things have mostly gone down. It has not really been that good unless you've been in short positions. Personally, a lot of things have happened in my trading that ended up not being too good. Overall, I am still up since starting this year, but it's definitely more difficult to trade right now than usual because there's a lot of uncertainty in the markets, especially what's happening when you bring in the whole macro worldview, economic, war, all of that stuff. But what we're going to try to do is we're going to just look at the charts and base our decisions of what we're going to trade based solely on the charts. And we're trying to not really let the big macro fundamental pictures get in the way of the technical analysis, because that actually happened to me this week, and I thought things were looking bullish, but then they weren't looking bullish, and I went into trades and I went out of trades. So because of that, I wrote down 2 different lessons that I learned. And so every single time that I learn a lesson, I think I'm going to write it down, and then I'm probably going to share it with you. I want to share with you during these market updates. But before we actually go over the lessons, I just want to update on the $100,000 challenge. In case you are unaware, I have a $100,000 challenge going on. We started this on February 13th, 2022 with $100,000. We went all the way up to 12% profit plus, and then I ended up giving back a lot to the market over the last week, and now our current P&L, it's still up. It's at 3.57%, so $3,572 on our $100,000 challenge, which all in all is not bad considering that the market as a whole is down. I did definitely do some things that I wish I didn't do. And so these are the lessons that I learned. I learned that unless something technically changes in your setup, keep your trades going, let them play out, and your original trade ideas are usually right. So I want to just continue to trade whatever I plan. And that's my favorite quote is plan your trade and trade your plan. So 99% of the time, maybe 95% of the time, I want to simply plan out my trade like how I do in these videos, and then put them in and then just let them ride, because they're usually really, really good and they usually hit. So I don't know why a lot of times I'll go in and I'll change them up. I'll try to siphon, a few more percent. So for instance, if I buy at $10 and my take profit's at 15, maybe it'll go to $14. And what I'll do is I'll take my profit thinking that it'll come back down to $13, and then I will buy back in at 13 and then try to sell again at 15. But what happens usually is that the price goes from $10 up to $14, and then I'll sell it, and maybe it'll go down to like $13.50 or something, or $13.20, and I won't buy back in, and then it'll go back up to 15. So I'll end up taking my profit way too early, thinking that, I'm going to stack more into this trade. But I guess these super low or much lower time frames, I'm not as accurate on those, so I might as well just keep my original trade. Like in that example, I might as well have just kept my original trade of buying at 10 and selling at 15, because then I would have been able to literally sell all of it at 15 instead of selling it at $14 and losing out on that last percentage gain. So I'm just going to be making my setups and trading them and not really mess around with them. So that's number 1. Number 2 is to stick to your trading rules no matter what. For example, never buying at major resistances, etc., etc. So this is super annoying. I'm really, really, really annoyed because I have my Cardano short, right? And I had a lot of money into this Cardano short. And so this was the chart, or one of the charts that I laid out for my Cardano short. And you could see right here, this was where I wanted to stack in the majority of my short position, and then I wanted to put a lot more in right here. And what I started doing was I literally stacked in short positions starting from probably like 86 cents. So I put a short in here for, let's just say randomly or hypothetically, I put $5,000 into my short here. And then I put another $10,000 into my short here. And then I put another $20,000 into my short here. And then I put another, like, let's say $50,000 into my short here. Okay, so I'm stacking my shorts as the price goes up, and I'm increasing the average buy price or the average sell price for my short. So if I click right here, so let's say that I had something like this. I had something like this was my original, my original trade. And I started stacking in my shorts so that I would get an average buying price here. But then this thing happened, and I was looking at the total market cap, and I was looking at a lot of other different things that looked like they could have been bullish. So for instance, if we go to total, you could see that right there, we did close above this. We did close above this line. And that was, if I scroll back, that was this big line right here, right? So we closed above here. So I thought, oh shoot, we closed above this gigantic resistance, and then we started going up. So this is the daily. I was looking on the 4 hour. So we started going up, and I looked right here, and I was like, okay, so we closed above it, and we tagged it again, and then we started going up. I'm super bullish. So that literally like worried me, because I thought, oh shoot, we're going to go up even more now. We're going to go up a lot more. So I freaking took some profits off the table, or not profits off the table, but I freaking closed out some of my short position, like probably 70% or something of my short position, 50% to 70%, literally right here, like right at the top, for a little bit of a loss, right? And because I was thinking that, well, look at the total market cap, look at Bitcoin, look at what's happening, right? Things are going to go up a little bit more. So I tried to buy, so what I did was I bought back some right here in the hopes of literally, let's see how much percentage this is, in the hopes of putting all of the position back into my trade, maybe like 7-8% higher, like right around here, like 1.5, maybe not even 1.5, but probably like 1.2, yeah, like right around here, literally like 1.016. Yeah, so this is what happened. I closed out some of my short position right here when I saw what was happening with the total market cap and what was happening with Bitcoin, and the possibility of a bullish of it continuing to be bullish. So I thought, okay, there's a pretty good possibility that's gonna shoot up another 4%. I was already in my short position from here. I was already in a really, really big short, and I was still falling in line with my regular risk management and everything like that. So there was no point in me closing it out. I could have just waited for this price to hit and then added to my short position, which was my game plan all along. But instead, I closed it out here, and then I put a short position in right here. And as you could see, it wicked up, and it never hit the freaking place where I wanted to add to my short. And then it fell back down, and then it fell down. So now it's like I'm at a freaking loss. I would have been better. I would have been better off just holding my position and not trying to catch this move for an extra, 6 to 10% or whatever. Like, I would have been better off just holding it. And the thing is, if you properly manage your risk and you plan it all out beforehand to know, like, okay, I'm going to be, let's say in this example, I'm going to be selling here, I'm going to be selling here, I'm going to be selling here, I'm going to be selling here. If you know how much you're going to be selling on the way up, if you're shorting, then you could get the average sell price, and you'll be able to calculate exactly how much you'll lose if you actually lose the trade, if it comes back up to, your stop loss. Same thing, like normally when people long, If you long, let's say you longed from this, from this right here, you long right here, and then the price keeps on going down, and you long again right here, you long again right here, you long again right here, you buy right here, and you buy right here, right? And then let's say you also buy like down here, right? If you're gonna do something like that, what you should do is you should input all of these buys and the prices that you buy them at and how much you buy them at into a calculator, so you could calculate exactly where your entry is. So let's say you bought at all of these lines as the price continued to go down, and you stacked your orders and you weighted them, so you bought more at the lower the price goes. Maybe your average buy-in price is like right here. So now your average buy-in price is right here. And if that's the case, well, let me put on a long position. Yeah, if you know that your average buying price is right here because you bought, and then you bought a whole bunch right here, then what you could do is you could use, calculate where your stop loss is going to be. Let's say your stop loss is right there, and you can know what's going to happen, how much you're going to lose on your position, on your trade, if your trade hits your stop. And this is specifically for trades. This is not for investing. For investing, you could buy here, buy here, buy here. You could keep on buying and just keep on stacking down, and then you get money in from wherever, your job or whatever, and you keep on buying. That's investing. You don't really sell and try to do this back and forth with investing. But this is for trading. So for trading, if you stack your orders in, you either need to preferably do it beforehand, know exactly where you're going to be buying or selling, put in all the numbers into a calculator beforehand to know exactly where your average buy-in price or average sell price will be, and then know exactly where your stop loss will be. And that way you can calculate your risk to know that you're not going to be risking more than 3% on that particular trade. And it's really dumb. I messed up on my ADA trade by selling, so much. Luckily, obviously the price came back down, so I'm back. Basically, I'm back at break even on this trade. So going back to the lessons, stick to your trading rules no matter what. Well, I have a trading cheat sheet checklist right here. It's available in the Cryptolete course at cryptolete.com, and I have literally over 10 different rules that I follow in this trading cheat sheet checklist. One of the rules is literally never buy the resistance, never buy near resistance, always buy near support, always sell near resistance. And the fact that I freaking sold or basically got out of some of my position, my short position at resistance, is really stupid. So I'm going to be looking over this trading cheat sheet and my trading rules every single time, because sometimes you know it, but you just get caught up in the hype or whatever. So this is a lot. I've been talking a lot. Let's get into the actual market update now. So I'm going to bring it onto my screen, and then we could actually get into it. So we're going to start off with the fundamental stuff, the big picture stuff, the tops, the bottoms, that type of stuff. And then we'll get into the actual charts for the different cryptocurrencies. Okay, so the first thing that we're going to look at is the Bitcoin Bull Run Index. And like this says right here, the CBBI is the Bitcoin index that utilizes advanced real-time analysis of 10 metrics to help us understand what stage of the Bitcoin bull run and bear market cycles we are in. The CBBI is time independent and price independent. It simply indicates whether it believes we are approaching the top or the bottom of the Bitcoin cycle. And so, like I just mentioned, all of these things that I'm going to look at are basically looking at tops and bottoms, where we are in the market cycles. And by looking at all of these different things, we could know that, or we could determine whether we're closer to the bottom or the top. And then if we are closer to the bottom, that's when I like to put more money into my longer term investment portfolio, because if we are closer to the bottom, then the things have more of an upside potential to them. as opposed to a downside potential when we're closer to a top. So if we're closer to a bottom, I try to put more money into my long-term investment portfolio. If we're closer to the top, then what I do is I take money from my longer-term investment portfolio and I bring it into my trading portfolio in order to start managing my risk a little bit better and taking more profits off the table, and literally like making sure that I secure my profits and possibly hedge with some short positions or something like that whenever we do get a big pullback. So that's the game plan. And we're at 37 right now in the CBBI, I mean. So if we come down here, you can see these are everything that it looks at, and you could see that this reaches 10, around 10 right here back in 2012, 2011, and then it reaches literally between 0 and 10 back in 2015, and then back in 2019 between 0 and 10, let's just call it 5, and then it has never really reached that level again. So there is quite a very, very substantial amount that it can drop in order to reach this level, this level again between 0 and 10. I don't really know, if it's really going to reach that again, but there is quite a ways to go, so it's a little disheartening, I'm not going to lie. And so if this gets to be under 20, that's when I'm going to really, really be interested in stacking pretty heavily. And you can see it's in this light green area, like right up here. So it's still, where is it? Here it is. Yeah, so like I said, it's 37. And I want this to be under 20, really. And if we go to the market update, market scan document that I have, I say if it's 95% or higher, I exit all the markets. If it's 10% and lower, I literally buy everything and hodl. So 37 is in the middle. So that's the Bitcoin bull run index. And next up, we have the Pi cycle indicator. And this one, I say, as soon as it hits, exit all the markets. So let's look at the Pi cycle top indicator. This one is just for tops. This isn't for bottoms. So we hit it back here. We hit the top back at around 66,000, and then it obviously we had that summer lull and the drop in the summer, and then we came back up to 69,000. So we actually made a new high, but the Pi cycle top indicator did not really show any signs of turning around. It showed signs of turning around, but it never got back up. So yeah, this was apparently the top. I mean, this was the actual top of Bitcoin, but this was really the top of the market. So it's interesting how this works, because this is strictly for Bitcoin, but Bitcoin had a new all-time high after this, and so you would think that this would have come back up again and then made another cycle top indicator, but whatever, it didn't. Anyway, the rest of the market did though, so that's interesting, except for a very few amount of coins. And so, like you could see, 2014 top right here, and now it's called the top right there in May. So it's pretty good indicator, and I'm just gonna wait until we get another chance. We're not going to see this even come close to showing another top for a very, very, very long time, in my opinion. And the other thing to look at is let's look at the priced 111 DMA versus the priced 350 DMA times 2, which is the green. And when it's look at this, 2014, it fell below it, and I guess came above it. Fell below. Oops, did not want to do that. Let me reset this. I'm trying to see if I can analyze the chart a little bit. Once it falls below here, sort of just stayed pretty down below, and then it had this huge rally, fell below, and then sort of stayed pretty down below. Okay, came up, fell below, stayed pretty let's see, this is from September 2019. Yeah, this is a long time. September to January, a few months. And then raised above, fell below. Okay, so you can't really say like, okay, it fell below this orange line, so you can't really use this as an indicator. There is another indicator though that I saw that I'm going to be sharing with you, which is like pretty accurate. Crazy how accurate it is. First, let's keep on going with these ones. So next up, we have the MVRV Z-score, and this is something that tells bottoms and tops really well. You could see green, you want to be buying in the green. That usually indicates the bottom, like right here is the bottom. And back here was the green, and it was pretty much the bottom right there. Back here was green, it's pretty much the bottom right there. So once this reaches the green level, that would be really, really, really good. And I was hoping it was gonna, shoot back up for a while, but it doesn't really look like it wants to do that. But then again, you never really know. And so if this reaches down here, then I will be going more heavily into cryptocurrencies. But right now, I'm pretty cautious. It fell below right there. It fell below here. And I don't really like that because it fell below it and then it shot back up. And that's usually pretty good. But now it fell back below it. So even where the previous support was for this, which looks to be, I don't really know what this is, 1.12. Yeah, once it fell below 1.12 and now it's still below 1.12, that doesn't seem like it's really good. So I am still super cautious and just waiting until this one reaches the green, or unless we turn around and we get back in the market and it goes up to the pink, then I'll get out there. But yeah, it doesn't look like that's going to happen. After that, I check out the R-HODL ratio, which is right here. And you could see that this is usually the best buy zone in this green area, and this is the best sell zone in this red area. So yeah, it's, it bounced off of this nice support right here, but 1,193, 1,150. So very, very close. But I don't know. It's just, I don't have the best overlook on the markets right now. So I will, wait until it reaches here or here, because we're right in the middle. And like I said, everything I'm looking at right now is like big picture stuff, like bottoms and tops. And I don't really see like the bottom or top, So yeah, just need to wait even longer for this one and for all the other ones too. Next up, we have the Bitcoin rainbow price chart. And this one is currently in the still cheap territory. So once this gets down into the buy territory, and obviously basically a fire sale territory, that's when I'll be going all in. And honestly, even if it gets down to the, it's too late at this point for the accumulate territory, because my big buy, next big buy is going to be at 30,500. So this is going to be in the buy zone for the Bitcoin rainbow chart. So once it's down here I'm going to be buying it. Obviously, like, it's right in the middle, so that's pretty much, look at this back here in the still cheap territory. That it was at 317 and it continued to fall all the way down to 228. And same thing when it was in the still cheap territory back in 2018, it was, 6,000, 6,000, 6,005. It actually wouldn't have been too bad to buy it in the still cheap territory, but it was at $6,000-$7,000 back then. And then obviously it fell all the way down to $4,000 eventually. So it wouldn't have been the worst thing to buy in the still cheap, but obviously the buy and the fire sale is the best thing to do in this situation. Next up, we have the Fear and Greed Index, and this is currently sitting at 23. And if we go back, or if we go to the Twitter profile, you can see it's at 23 now. It was at 23 14 hours ago. It was at 23 14 hours ago. It was at 22 16 hours ago, and 22. So it's been okay. So basically between 22, either 22 or 23 for honestly the past day or 2 or 3 days. Yeah, it's been okay. 22, 22, 20. Yeah, so it's been at 22 for quite a while. For this one, for me, under 15 is an automatic buy. If it reaches under 15, that's an automatic buy. If it reaches over 85, I start scaling out. I believe that is what I wrote down here. Over 75, start scaling out. Unless we're entering into a full-blown bull market, then I won't scale out. But if it's under 15, then that's definitely a buying opportunity. So it's at 23, not really a buying opportunity right now, in my opinion. And then finally, we have the funding rates for perpetual swaps, perpetual swaps, perpetual future contracts, whatever you want to say. And they're all negative, so it's paying the longs. So, I mean, that's good if you want to go long. Okay, and then the last thing that I want to show when it comes to bottoms and tops is this chart right here by Crypto Hunter, which basically has been spot on. It's been absolutely crazy. So you could see that looks like these are two moving averages. Or the bands, moving average 350, if I could zoom in, 350 day moving average. And then there is some other, indicators in there. But regardless, look at this insanity right here. So bottom. So the next bottom, when it comes to these bands, it looks like it's somewhere between 20,000 and 26,000. That's what I would say. And this actually lines up really well with my thesis, which is that we're going to see a drop to 26K, because my thesis is that we're going to go to 30,000, right? And then a lot of people will buy at 30,000, and then we'll dump underneath 30,000. And a lot of people will sell because remember last time we hit 30,000 and then a bunch of people sold when we dropped down to 29, but that was just the rebound for all the whales to accumulate more and then bounce us back up to 69. Well, this time I think what's going to happen is we're going to drop to 30K. And then we're going to rebound a little bit because a lot of people will buy. But then I think we're going to fall. And then I think we're going to fall down to 29. And then everyone's going to say, oh, well, last time it rebounded from 29. So I'm going to buy at 29. But then what I think is going to happen is I think that the price will continue to fall. And then everyone who bought at 29, so like down here, everyone who's like, oh, I'm gonna wait till 29, and they bought right here, I think the price will fall again even further down to say 28, 27, and then all the people who bought at 29 and the people who bought at 30 who were waiting will eventually capitulate at 27, and then that will bring it down to 26-ish, and then once that happens, then everyone will say, oh, we're at 26, we're going to 20, because look, this is the previous all-time high, basically, back here, right? So, oh, we're going to 20 now. But I don't think we're going to reach 20. I really don't see it. So, because all the whales will be buying well in advance in this area, that makes absolutely no sense. Like if I controlled the market, and I know someone talks about the market maker or the composite man or whatever. It's like you have to think of all the big whales, just consolidate all of them into like one person, as if it was one person. What would that person do? Well, if I was that person, I would have it be, I would buy and make sure to buy literally within this box. So maybe bring it a little bit higher right here in this box. Why is that? It's because literally everyone is waiting for this zone right here. Everyone is waiting for this zone, and everyone is also waiting for it because of the previous high, right? This is the same thing that happened back right here. Everyone was waiting, including myself, for 3,200, right? 3,200 to 3,500. Maybe 3,500. This is where I was going to buy back in, was around 3,500 once it started to fall, right? Once it fell down here. And when it did that, I was like, okay, I'm going to buy at 3,500 because I know that a lot of people are going to want to buy at, down here at 3,200, but I'm going to buy at 35 to front run them. So you have the people like me who want to front run everyone, and then you have everyone else who wants to buy even lower and get scared. And then you have the actual market and the actual market maker, the composite man, who says, no, screw you guys. I'm going to make sure to buy all of it at 3,900 above here, where it doesn't really make too much sense because like everyone, everyone thinks that they're going to buy it lower. So they buy it here and then it ends up shooting up. And I didn't end up getting back into the markets until like right here, like right once it came above this area right here. And then I got in around like 7,500 or something. And that's where I ended up getting in. So instead of like, waiting for it to reach here and then having it pump back up, and like, let's say it comes down here and then it starts pumping back up, and I'll get it in and I eventually like buy it right here. This is the resistance. This right here, 30,000 is going to be a big resistance, right? This entire area, once this breaks, if this breaks, this will become a huge resistance. So it's like this. You could either wait for the support, $20,000 support, buy at the support and try to sell at the resistance, or you could buy somewhere in the middle where there's a very, very high likelihood that it will come back up to the resistance. Or you could try to buy here and then have it, have it come down, to here or whatever, and then turn around before you could get your buys in, because the price never comes down there because everyone wants to buy it down there, and then you're forced to buy it at the resistance. Or if you want to be a particularly like savvy trader or whatever, then you're forced to buy it until it breaks above here, and we hopefully keyword get a retest. So I would just rather buy it here, because on the macro scale, the big picture scale, this is an incredible buying price. Anywhere between $20,000 and $28,000 is an insanely good buying price for Bitcoin, in my opinion. So like, why not just get it there? Like that's my game plan, 26K. And honestly, I'm going to be buying some at 30.5, because this has been such big support, and I don't really think it's just going to like flash crash underneath there. But like, even if it does flash crash underneath there, when it comes back up, I could just sell it. I could just sell what I bought at 30.5, and it's not going to be that big a deal. However, if it does flash crash, or if it does crash, then I could just start stacking in all of my orders right around here. And that's my game plan, because then I could sell some for a profit right here. And then if it happens to come back up, I could try to get in on a retest, maybe a little bit above there. And that would be the trade. So although a lot of what I buy right here is going to be for the long-term holds, and I'm not planning on really selling it, to be honest. Maybe I'll try to sell it at 30.5 and then try to buy it back at like 29. But like, I don't know if I even really want to do that, to be honest. So that's my game plan for Bitcoin. With all of that said, now I'm going to make this chart be a little bit bigger, and then I'm going to just go through, the total 2, dominance levels, and all of these things, and sort of just go through these coins. And I think what I'm also going to do now is once I do go through a lot of these, I am going to go into the FTX perpetual futures coins and just start basically charting them out from scratch, because I added this list here into my TradingView account, and I deleted a lot of my alerts, so now I can make new alerts. So I'm going to go through these to see like where there are good positions for me to short, because if you want to short the market, like don't short Bitcoin, because Bitcoin is Bitcoin, and Bitcoin has the highest opportunity, the highest chance, of moving up, because like everyone loves Bitcoin. So look for other coins that have not been performing very well, and then try to short them, because you'll have a better probability of those coins going down. Like that's why I had my ADA short or whatever. That's why I was shorting ADA, because it's been in this long downtrend, and then like I wait, you wait until it pops back up and then you short it. I already mentioned that I messed up on shorting it. I messed up on my short position earlier with ADA, but there's plenty of other coins. I don't know, maybe BAT. If BAT comes back up into this zone, like right around here, this would be an amazing shorting opportunity. BNT, I don't even know about BNT, but look, like right here, short it right here at this big support resistance level. I don't know, C98. Oh, C98 is already at the basically the bottom. So maybe if C98 comes back up to here, that would be a good short. But yeah, I want to look through all of these because look at pancakes. Look at cake. So many people loved cake. So many people were really bullish on cake. But if cake comes back up here, that would be a great shorting opportunity. Maybe a little bit higher, maybe like up here. But like regardless, that's what I plan on doing. So I'm gonna go through the regular market scan first, and then I will start going through those. So give me 1 second to load up my trading view into the proper size, and then I will be right back. All right, guys. So now we're going into the charts, and the first thing that I want to notice or that I want to mention is this chart that I saw from Crypto Twitter. It was from Crypto Hunter, and it showed these EMAs and how the price just bounced off of these EMAs every single time, and that always signifies the low. And so I put it into TradingView, and look at how insane this is. You could go all the way back, literally all the way back to 2011, and if we zoom up like this and we make this chart look a little bit easier to read, you could see that in 2011 there was that was basically the first really big run up for Bitcoin. And then it had the, fall from, what was it? It was $30 down to $1 and $2, basically, from $30 down to $2. And look at where it landed, right in between these EMAs. Then if we keep on going right, what happened is it had the next bull run in 2013, and it had a huge bull run, and it went from $2 all the way up to, what is this? $1,164, pretty much. So from $2 to over $1,000, that's absolutely crazy. So that's 500x for the people who got in 2011 at the lows, and then it dropped from basically $1,200 all the way down to right here, which is about $170 to $180. And this one fell just below this line, but I mean, this is pretty much the low. And so if we zoom out and we make it look like this, you could see that this was the low right here. Like as soon as it touched it, this was pretty much the low. So you'll be fine if you got in at $200, right? So then it bounced off of here, and this was pretty much the low, $200. And then it went on another bull run from 2015 all the way. It was literally in easy mode from 2015 all the way to basically June 2017, and that's where there was a lot of this was definitely difficult times. But if you just held or just kept going, then eventually there was that peak euphoria phase in 2017 up here where it reached all the way to $20,000 before we reached an actual bear market. So we reached the actual bear market in 2018, and it fell, and lo and behold, look at this. It fell right into these lines, into these moving averages between 3,200 and 4,000 before, making the way back up. And then it went back up, and it did that before having the COVID scare in 2020, and it tapped this. And then again, we went on, after 2020, from March 2020 onward, we started the bull market. And honestly, we started the bull market back in December 2018, but COVID and everything sort of made it, sort of brought us back. So it's either we started here or we started here, because this was sort of a black swan event. So, it's hard to totally say exactly, but let's say we started here, whatever. We went on a bull run, and we went from 3,000, let's just say 4,000 up to 69,000, so we got the 69,000 back in November, and now we're making our way back down. And so this looks like it's lining up to be somewhere between 20,000 and 24,000. So anywhere in this zone would be just a phenomenal buy based off of history. Okay. So I don't think that it's going to come down here, to be honest. However, I wouldn't be totally surprised. Regardless, though, if it reaches this area, if it reaches 26K, I will be all in 100%, taking out loans, doing everything I can, and buying all I can at 26,000. Not financial advice, but yeah, that's my plan. Is if it reaches 26,000, I'm gonna be all in. But however, if it reaches 30,500 or even somewhere around here, then I might just buy it. I'll probably buy it here because we're probably going to get a bounce, from this area first, and so I'll buy it, and then maybe I'll try selling some at resistances and then seeing what happens, trying to play this until we get like a clear confirmation of the trend. And I think ultimately it's going to fall back down and then fall down to 26K, but I don't think that I don't know, this just from historical context, 22, 23, maybe 24,000 to be on the more conservative side could be reached if we are using this metric. And this is the Bitcoin 350 DMA set to the normal settings with everything turned off except for these two. So just wanted to point that out. Found that to be super, super, super interesting. Now that we have that out of the way, let's go into so basically I'm more bearish, like I'm leaning more bearish overall, even though we might get a pump or something, but like I'm still, until this is reached, I'm gonna be leaning more bearish. So now that we know that, let's go into the total market cap of all of cryptocurrencies. Okay, so now we're at the total market cap of all of crypto, and you could see that we reached in 2018 about $750 billion, and it went all the way up to $3 trillion before finally crashing back down. Now, where's the biggest support? Well, the biggest support are these three wicks right here. This is a monthly chart, and there's three big wicks at basically 1.15 up to 1.2. Yeah, so I'd say 1.2 trillion. That is clearly the lows of the total market cap. And if I put this back on, you can see that I have it set right here. Get all of the spare money you can salvage and go into the crypto, all into crypto at this point. If it ever reaches this point again, I think we'll see a huge bounce if we do get down here again, which we most likely will. And as well, this is, if I get rid of this is the Fibonacci from the lowest point up to the highest point, and this is the 61.8. It's at 1.216. So, 1.22, that's where I'm going to be, stacking in and going in super, super hard and being a lot more risk on, because I think we'll get a big bounce from there. And maybe what'll happen is the price will the market cap will come down here again, and then we'll have another big rally, and everybody will think, oh man, this is going to be such a, big rally, and we're back, bull market's back on, and then maybe we get rejected from here again and then fall back down. I don't know, but this is going to be the game plan. Basically, I know I'm definitely going to be buying down at this point. Other than that, I don't really like how this is looking. So this is the monthly. Let's go down to the weekly. The weekly, I already did mention this, how we had this huge candle right here, and I was so excited. And then I bought the breakout like right around here, and then we crashed back down, and that was utter disappointment. I'm super sad about that, super mad, because I went from about 12% P&L down to like 4%. So that really sucks. But we are, making a game plan right now, and this new game plan is gonna work out, or at least that's why we use risk management. That's why we use risk management on the trade. So I can't really complain for being up 4% when most everyone in crypto is down like 50%. So so I'm just gonna keep on doing what I'm doing, because it seems to work out pretty well in the long run, at least. And so going down to the daily chart, this is what I see. The first thing that I see is that there's massive resistance right here. And that what happened is a fake breakout. And that's what caught me off guard. I hate fake breakouts. So, okay, if you're watching this, know this. In 2018, I played the breakout plays every single time, and my account just dwindled lower and lower and lower, and I just lost more and more money every single week. Every single couple of weeks, I'd play the breakout, and I would just end up losing money. So I will not play any more breakout plays anymore, not until we have a confirmed uptrend. I'm either going to be playing the major supports like down here, right? Maybe right here is a really big support as well. But like I'm only going to be playing the major supports, and by playing I mean buying. I'm only going to be buying the major supports, and I will be selling the major resistances. This is what I wanted to do and what I've been doing, and I will no longer be playing any breakout plays. So that is very, very, very important. Okay, so we have the total cryptocurrency market right here, and ultimately, honestly, I don't know if I mentioned this yet because I've been pausing it and unpausing it, but I do ultimately think that this will break and it will fall down to $1.2 trillion, $1.216 trillion, and we'll get the bounce from there. So I'm not going to be longing much until we do get this breakdown here, and I'll probably be shorting. And if we do get this breakdown here, then if let's say it breaks down to, let me draw this out. Let's say it breaks down to like here and then bounces back up, I will 100% be shorting the markets right here. So now we can move on to total 2, which is the crypto market cap for all of the altcoins. And this has not been faring as well as Bitcoin has, which makes sense because in a bear market, Bitcoin falls much less than altcoins do. And you could see I drew it out here. It's very obvious. Look, it was the top right here back in November. And then we made a lower high, 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 a lower high. Literally, we have not made a higher high since November. That's 5 months, 5 months of lower highs. Yeah, the market is just going down and down and down and down. And what should you do? Trade with the trend. Okay, this right here, the only reason why I was bullish last week is because we literally made this low and then we made like a higher low, and you could see this on the total market cap. Same thing, we made a higher low right here. This was the very first higher low, and then we closed above here on the diagonal resistance. So this was the first higher low, so there was the possibility of making a higher high. Obviously we did not get that, and we did not get that on either. So even though we got this higher low right here on the total market cap 2, it's still there was no follow through. So we ended up getting rejected off of this resistance and then falling back down. So let me erase these just to clean the chart up a little bit more, and I'll keep this one here, and I'll keep this one here, and I'll keep this one here. Now we have a new one. So that was really unfortunate. I was really, really hoping that we would just pump up to here, get everyone to FOMO in again, and then we would fall. That's all I wanted. But damn, we didn't even get that. And just like how, like all the way up here, like I wanted it to go up even higher, or even right here, I wanted to go up even higher. Or when Bitcoin was at $40,000 and I went into $40,000, I was thinking it was going to go up to 45, and that's what I was going to sell. And it didn't even get to 45. It stopped at 43 and then started to turn down. That's the same feeling that I get right here. Like, damn, it didn't even get up to here and it started to turn down again. So that's really bad. So same exact thing, like what I believe. Like I'm literally, this is going to close. This is most likely going to close here. And if it closes here for the crypto total market cap 2 for alts, look at this. This was the support right here. Let me go to right here. This right here was the support. Actually, it was a little bit above it for the total market cap 2. And now, oh my gosh, get out. There you go. And look, it's right about to close. It's right about to close underneath of it. So if it closes underneath here, if this is a close, that's an automatic sell for me. I want to sell my positions right now. I honestly really want to sell all my positions right now and just go wait until it reaches here, or wait until it falls down and then comes back up and then short it here, which is what I'll do, which I'll say. Okay, so the next thing that I look at is the altcoin dominance chart, and you could see that we never came back up to the January 2018 highs, but we did come back up to the May 2018 highs, April and May. And that was probably because the January one was just way too overextended. And then we, had the rebound in May. And then by the time things got up to that level in 2021, people were like, okay, like let's be more conservative and take our profits here. So this is the altcoin dominance chart. And obviously you see December 2020, that was literally the low, the bottom of the market was like right around here, December 2020, January 2021. And then we just had this massive boom of altcoins for like, what, five months of where altcoins were just absolutely rocketing up until May. And then when May began, that's when we started seeing basically the top of the market. And so, or at least the first top of the altcoin market, and things just started crashing. So now we are still above here. We're still in this zone, in this area, but I just don't like the looks of it. It's amazing to me because altcoins are down 60% from their all-time highs. Some of them are down 70% from their all-time highs, and yet the altcoin dominance level is still at 56%. So that is nuts to me because this, it should be down here. Like, it should continue to come down and eventually like reach this area at least, if not this area down here, if Bitcoin and cryptocurrency and the crypto markets are anything like they used to be. I mean, maybe the dynamics have changed drastically so much that like it's different this time, but I really don't see it. And 38.2, I could definitely see it coming down to the 38.2, which means that altcoins would see a significant continuation to the downside compared to Bitcoin. And that's scary. That's a scary thought, especially for people who are in alts right now, they're down 50, 60%. And you're thinking, oh man, they're already down so much. They could go down another 90%. So that worries me. This is the monthly chart. Maybe if we go down into the weekly chart, we could see something a little bit different. On the weekly chart, we are printing we're just beginning this week because it's Monday. So we don't know what's going to happen yet, but we had 2 red weeks in a row. And we are going to, let me just do a little bit of analysis here, and I'll figure this out. Okay, so if we take the Fibonacci from the bottom to the top, you can see the 61.8 is right there, and that's why I said start to long alts here. And we probably will see a bounce from here, but I don't know. I am overall not really liking the situation and would prefer to stick to preserving my capital as much as possible until like really, really key levels are met, which is what I'm doing in my investment account. I went over that. I have a whole video talking about that. Just a few videos before this one. And so I want to focus on preserving capital and shorting the pops because this just, I don't know. I don't get a good feeling when looking at this chart like right here, And going down into the daily, you could see that, we popped up, we came down, hit the 38.2 right here. Then we hit the 50% right here. We had a pop. And for some reason, we popped up before coming down to the 61.8. So yeah, I think alts will not fare very well at least until it comes down here. And then maybe we'll see a pop back up, like a little short-term pop back up, and then probably another fall to maybe here. And then, I don't know. I think that altcoins this is sort of like a big like triple top or big arc that's going to come down. And then right here is where the money is when it comes to getting into alts, like super, super, super heavy. Okay, guys. So now let's go into Bitcoin over here. And what I did for Bitcoin is I did a couple things. First off, at the very top, this is the range top right here from 62,800 up to 68,950. So let me just take this, make sure that this is right there. There you go. So this is the range top. This down here is the range bottom. Not only is this the range bottom, but it also falls in line with the 61.8 of the entire move up since the bottom or the start of the bull market in March 2020 when we had the COVID outbreak, right? So big move up, boom, falls back down, and it's looking like it's going to come back down to at least $29,000. However, I'll probably be in, somewhere around 30,500. This is where I want to get in, just to make sure that I'm in beforehand, And so once it reaches here, this is a great buying opportunity. Everything else, not so much. I was super, super stoked, as I mentioned in the beginning of this video, is that I was really, really stoked because yesterday I thought that I thought that we might get some follow through, and we might get the very first bounce up to the Fibonacci level of the retracement of this move down. So if you take the Fibonacci from the top to the bottom, you see this is the Fibonacci, and I was really, really thinking, okay, we're gonna get up to 47K, like basically $46,697. So 46,000. That's it. Yeah. So I thought we were going to get up to here, right? And possibly $49,000 somewhere up here. So I was really, really thinking, okay, boom, this is going to be great. However, of course, we didn't. If we go down to the daily, you could see that where is this? Let me get rid of this Fibonacci. Boom. You could see that we had the largest daily candle that we've had in months, right? The largest green daily candle that we had in months. So I thought, okay, that's pretty cool. And then also we tested this resistance right here once, twice, 3 times. And I thought, okay, we had this huge, huge, huge candle, the biggest candle in months. We're about to test it a 4th time. I think we're going to come up, come back down, retest it, and then shoot up to 47K. So I freaking bought right here, thinking that I was gonna do that. And this is the deal. This is what is like my reflection of what happened in the markets and how I can improve. Is that before this happened, before I bought right there, before I bought the resistance, I literally said, I'm selling into this area. So I started to sell, right here. I sold some right here, and then we closed right here, and I thought, oh man. And then I ended up buying back right around here, right at the resistance. So I get it. Like my theory had some basis to it in that, okay, this is the 4th time we're testing it. It's off of we just had the largest green candle that we've had in months. There's a lot of people on the sidelines right now because they're scared of what's happening in Russia. We had the first higher low right here. We had the first higher low that we've had since the bear market started. So there were a lot of confluences happening that give me that decision to buy right here. However, ultimately, my number one rule, literally in my trading blueprint in the crypto mastery course, is if it's at support, don't sell. If it's at resistance, don't buy. So from now on, I will never buy at resistance unless we are in a full-blown bull market again. And obviously, I'm not going to sell at support because I was thinking of selling right now, but we're pretty much in a place of support right now. So I'm not going to sell. That's why I'm not going to sell right now, because I was about to after looking at the other things I was looking at. But you know what? We're too close to support. Like, look at this. This is the support, and we are right here at the support. And let's say this is the support, and this is the big resistance, right? Where are we closer to? Well, obviously, we're closer to the support. We're literally like probably a few percentage away from the support compared to the resistance. So if you sold right here, the chances of it, you're taking such a big risk by selling here. You sell into green, into resistance. You buy into red, into support. And so even though the price can fall down and do this, and it could drop literally, how much is this? It could drop 12%. Let's say it drops 12% tomorrow, and I did not sell today, even though I was thinking that it was going to fall, so I wanted to sell today. Let's say that it drops 12% tomorrow. I still have to be happy. I would still be happy with the fact that I followed my rules, because in trading you have to follow the rules. Right here, I did not follow the rules, and I got smoked because of it. Okay, my P&L went from over, I think my P&L was literally over 17% at one point positive, and it went from 17% down to 4% in P&L. So I will no longer be doing this, and as I mentioned before, I will no longer be buying breakouts. I will absolutely not buy any breakouts in a bear market. I did that in 2018, and I will never do that again. Okay, so knowing that we're never going to buy the breakouts, knowing that we are never going to sell the support, knowing that we're never going to buy the resistance, what are we going to do now? What's the game plan? Well, what I do is look at the short term, like where we are right now. And you could see that this right here was an overextension. And then we basically had the support right here at around 36,800. And this was really good support. And then obviously hit the resistances, came back down, hit the support again. And then we had that big move up. So now we're back down, like I just mentioned, near the support. So I'm not going to be selling. And we could come back up and hit the resistance again. And that would be the fifth time, 1, 2, 3, 4, 5 times. But honestly, at this point, I don't know. I don't see it happening. This is probably going to be, hopefully, this will be a higher low. If this breaks and closes one day on the daily below this 36,800 level, 36,850, then that's just like, I don't know. To me, that's lights out. I'm selling everything, and I'm not going to buy back until we hit here, unless we, I don't know, rise back above it and then close back above it. Then maybe I'll buy back. But yeah, I really don't want to get shaken out. That's another big thing that I'm trying not to happen, because over trading is super, super bad, especially in these bouncy territories. Back here it was super easy to play this entire range, this entire trend. But now it's like, look at this. We've been up and down and up and down and up and down. It's been super confusing. So I really don't want to overtrade this. So I might not take many trades in the next couple weeks, unless of course we come down here. Then of course I'll be buying it, and if we come up here, then of course I'll be selling. I'll be sticking to my original game plan this time, and I will not be getting all worked up and stuff. It was this candle and this higher low has really got me going. But nah, I'm gonna stick with it. And so the game plan now is, what I'll do is I'll take the fib from the top to the bottom, saying that this is the bottom. Let's say that this is. And then at 42,115, that's right under the 61.8. So that's where I'm going to be selling some of my Bitcoin and taking some profits off the table right there. And that does line up with the confluence to the left that you could see this all the way. This entire zone is a sell zone because it is a resistance. So I'm going to be doing this. And this is where I'm going to be selling. And what will the trade be? The trade will look like this. This is what the trade will look like. So I want to put on I want to be selling and then shorting, pretty much shorting like this. And so yeah, this will be the trade setup. And let me go down to the 4-hour chart to make sure that we're all good here. Yeah, and this will be basically it. So this right here, this top was 45,470, so 45,477. So that looks good to me. And so this is going to be the play and this is also resistance from all the way back here and back here. Is there more resistance? I mean, geez. Yeah, literally. Okay, all the way back here. So this is a big enough resistance level. This is absolutely a big enough resistance level to warrant a short position on right here, especially given that the total looks like it's going to fall, and then the total 2 looks like it's going to fall. So, but this is why I'm not selling. It's also why I'm not selling, because this is support right here. So I am going back to here, and I think we'll get a move up over the next couple days. Maybe up 12%, and then probably end up falling. So my game plan is something like this, I guess, and then probably fall. If I had to guess, it'll something like this. Okay, so I have to say this. I am an idiot. I I can't believe it. I'm going over my rules. This is why this is very good, very good info for you right here if you're watching this. If you are learning something new, or if you are getting into something, or you're very passionate about it, and you're getting all this new information, and you're in that zone where you're just absorbing mad information, like a lot of information, you're really passionate, really into it, and writing everything down. What you have to write everything down. Write everything down and create the plan. Create like the rules that you have, and get the knowledge, acquire the knowledge, and put it down on a paper and put it into a format that you could continually look at over and over and over again. Because I'm looking at my rules and my rules cheat sheet, my trading cheat sheet that I wrote down over the course of 3 years. 18, 19, 20, 4 years now. I've been writing in this, and I always update it. And the first one is to make sure that you draw the support and the resistance lines. That's the first thing, the horizontal support and resistance levels. And then it's to draw the trend lines and counter trends. And one of the ways to see the trends and the counter trends is to use the exponential moving averages, the EMAs. And as you might have noticed, like 5 seconds ago, I did not have the EMAs on here. All of these lines were not on the chart. I turned them off. I don't know when I turned them off, but I turned them off. And now, so I was like, what the heck? So I turned them back on, and it's so ridiculous because look at this. This white one that has a bunch of plus signs on it. This is the 200 EMA, and it's like this one I use this one like significantly to know when to buy and when to sell. So if I had this on, I probably wouldn't have been so bullish right around here when, I would have been like, oh man, this is just too much of a powerful EMA. Yeah, it's the 200 EMA, and unbelievable. So if I would have just had this on, I definitely wouldn't have bought. So always remember to write down everything as you learn it, and keep on going back through it, and remind yourself over and over and over again. So knowing this, this is still the game plan. I'm still gonna try to short the 61.8 pop on here because I don't see it coming back up again. I mean, it might, but this is a pretty big resistance at this point now, and so that's the game plan. And I just needed to throw that in there because I turned it on and saw what happened, and I was like, wow, unbelievable. I can't believe I made that mistake. But obviously, this is why you learn, and as long as you continue to learn and you continue to grow, you continue to progress, then that's all that matters. And just one other thing, looking at Bitcoin, this is a possible place to long it. It's just a possibility because if you take the line from the cycle top to right here, and then right here, it has had 3 touches, or 4 touches if you count this on the weekly. So this line is a possibility of a retrace of a bounce, which is around 31,200. But I don't know. It's like, or maybe 32,000, like anywhere, this entire line, right, has the opportunity because on the weekly. But I don't know. I think the horizontal area down here at 31,500, or like 31,000, just like, I think like this is a better gauge. So horizontal support and resistance is always more powerful and weighted more heavily than diagonal support and resistance. So this is the diagonal, right? So I don't know, this is just something else to keep in mind. And with saying that, let's move on to Ethereum now. So Ethereum, look at all of this red, this constant red. 1, 2, 3, 4, 5 weeks of red for Ethereum. 4, unless this week turns red, then it will be 5. And that's really terrible. This also had this nice, it looked like it was so good, and then it just fell. So that sucks. The next buy for Ethereum is 1,890, to be honest. I mean, this is pretty much it. This is the weekly, close right here, weekly open, obviously, right there. Also, it has this entire area. So yeah, I'll be buying Ethereum down here. Nothing else really looks too appealing to me. I guess we could say, I don't know, this 1, 2, maybe if we go down to the daily, we could see a better a better picture. So obviously 1, 2, 3, 4, 5, 6, 7, an entire week of support right here, and then support right here. So obviously this is support at 2370, but I mean, I don't know. You could buy it. I'm sure if you want to buy support, maybe like something like this could work. Something like that could technically be a play. It could technically be a play right here. Let's go to the 4 hour. So on the 4 hour, if you want to get in at the support of Ethereum, this would be the play for Ethereum right here, because you're getting in at the support, and this was like some off shot thing, and this is below here. Yeah, like I don't know. This would be like the play that I would do. I probably wouldn't even do that. I'd probably do this, to be honest. So it's like 1.87%. It's not like the best. It's not the best ratio. But it's probably a high probability. This does seem sort of high probability, to be honest. So this could be a play. I would only risk like 0.5%, maybe even less on this though. So yeah, for Ethereum, I mean, 2568, like this is really the 2560. Anyway, this is really the like, I don't know. We had a doji candle, and then it looked like it was going up. I was super stoked, and then just crashed all the way down, and it was red, and now it's red again. It's looking like it's going to be red again. It's only one day, so you have no idea what will happen. But yeah, this on the big term, this is the new resistance. And so we might get like a spike up here or something like that. But this, honestly, this is the resistance now. This is the support, 23.26. And on the longer term time frames, the higher time frames, this is the range low at 18.47. So I would really sort of wait to get in until we reach somewhere around here. And literally even down here, like, these are the 200 weekly moving averages, so 200 day moving weekly average, so exponential. So I would probably, it could even come down here, but I would definitely be in around this area, that's for sure. And so I'm not bullish on Ethereum either, and it's like lower highs across the board, just constantly lower highs. And this is even more drawn out than like this was back here. At least this was just like a huge drop, like a huge tank in the market by some whales, giant whales, and then like a little bit of consolidation before falling down, and then a little bit of consolidation, and then we had the big run up. For this one, it's like down, consolidation, down, consolidation, down, consolidation, down, consolidation, down, consolidation. So this is its distribution in from the whales to like the gamblers and the speculators and the people with less money, and then the whales will buy it all back down here, because everyone who's been buying all the dips will eventually capitulate once it falls. And so yeah, I will be buying at 23.26, and I'll be buying at 18.68. And if it happens to jump all the way back up and all the way up to 3,000, I'm gonna miss this move, and you know what, I will be perfectly okay with that. So that's the game plan. Oh, and additionally, I wanted to add that if you take the Fibonacci from the bottom to the top, this area, basically 1960, this is the 61.8 as well as the range low. So this is a really good buying opportunity. This is where I would really want to buy. Okay, so the next thing that I always look at is the Ethereum versus Bitcoin chart. This chart really tells you a lot in terms of what the alts are going to be doing. And I was liking this. Well, first, before I even get into that, what I did was I took the Fibonacci from the top to the bottom, plotted out the 61.8, and then got, and it's crazy because the first bear market started in May, right when it hit it. And then the second bear market, or I guess the real bear market, whatever, started, November, like right when it hit it, like up here. So it just goes to show the Fibonacci's always rule. And so we hit there, I sold, and then we, came all the way down. And I was seeing this triangle pennant thing like play out, right? If we go to the daily, we could see it looks like this. And so I bought right here, just like 3 days ago, something like that. And I was going to sell it like literally right here. I wasn't even going to try to get a breakout play or anything like that. I was just going to sell it at the resistance, a little bit below the resistance actually. But obviously it had such a weak bounce. It bounced so poorly. It hardly bounced at all. And now it fell, obviously, and now it's down. So that's really terrible. And it looks like it's going to be closing underneath the 4-hour close, which is going to stop me out. So pretty angry about that. So yeah, I mean, I'm trying to preserve my capital, just taking like a million small losses or a million losses in a row right now, and not going. This just falls under my bigger thesis. Like, I'm not going to be buying anything. I really don't want to be buying anything. And once this closes below here, it's like lights out until at least here. And that's probably not going to be the low. The low is probably going to be here, which is another 20%, 19%, which means that alts are going to completely get even more decimated, fall by another 50 to 70, 80, 90% from here. A lot of them probably aren't going to recover. And that's just the name of the game. So once this closes below here, and on the Bitcoin chart, Bitcoin closes below here, and Ethereum closes below here, that's when I'm just going to sell everything. I'm not going to sell it right now, right now, this very second, because we're at support. And I plan on selling Ethereum, selling if it pops up here to this resistance. And Bitcoin, I'm going to sell if it pops up here, but I'm probably going to sell somewhere around here for Bitcoin. And then ETH against Bitcoin, I'm not going to sell right now. I'm trying to just get out near break even, somewhere around here, because it's just so bad. But that's pretty much, I mean, this one, I guess you could take this one out. This has all the support right here. This has all the support right here, I guess. And then also these two things. So this is big support. And then this is also, where's the support for this? That's what we need to know. Which is real. This one seems not as significant. So I'll delete that one. So this one right here is the main one. And I mean, it's almost like you could raise it up here, and this is the real one, which makes it very, very, very scary, because if it closes down here in 30 minutes, which is what it's going to do, then I'm going to have to sell it. But this is really where the close needs to be. And so I can't sell on this giant downward spike, so I'm trying to sell. Hopefully there'll be at least a little bit of a pump up where I could actually sell and get out of my Ethereum. That's what I'm really hoping. But if it closes below here, I'm out of my Ethereum, I'm out of my alts, and I'm gonna be done with this market. Okay, so next up we have Quant, obviously. So it fell about 80% from the all-time highs, and now it is just about 27% above the previous lows, which was $84. And for Quant, I could see it coming back up to 146, maybe even 157. It's just I'm half in it, half out right now. So I'm really just waiting for it to come up, and then I'll take my profits, or for it to come down to $86, and then I'll get back into it, because Quant it tends to decouple from the market and from Bitcoin and from a lot of the other things that happen. Sometimes this is what I noticed. So I am holding on to some of my Quant, but as you could see, if I do this, let's see here. Yeah, so there's still this resistance, that it's facing. Or you could bring this down like this, and it's literally the same thing as the other one that I put on, where where this was the resistance and then busted through it, and then it came back down, and it's been acting as support. But obviously a diagonal line, it doesn't really matter if it acts as support if it continues to go down, you know? So that's why we always use the horizontals. And I mean, if you look at it, you could see that it had the low, right? And then it had the higher low, at least that's what this was, but it had the high and then the lower high continuation from the previous high. So it has not made a higher high yet. It needs to make a higher high above here, above 155. And honestly, I just don't see that happening anytime soon, given what the market is doing. So that's why if it does come up to 146, that's where I'll be selling, even though it has this entire space from 146 up to basically 160 where it could go up to. But just like what happened with Bitcoin, where I said, okay, I'm selling it right here. Then what happened is I sold it right here, and then Bitcoin went up, and then I ended up buying back all up in this area. I'm not going to make that same mistake with Quant, although watch Quant just, bust through it this time, But what I'm going to do is I'm going to be selling it to make sure that I lock in my profits for Quant up around this big resistance. And so my game plan is to sell at 146 and rebuy it down at 86. And so that's what I am going to, that's the trade that I'm going to be putting on. And then we have Cardano. So for Cardano, the short play is still intact. And if it comes up to 0.96 cents, that is an amazing shorting opportunity. Literally like even just maybe a little bit below it as well, 0.956. If I could lift this up to get in just underneath, that would be great. So maybe like here 959. I guess 96 is fine, because the high right here, or not the high, but the close was 962. So yeah, 96, 959, 96. If we could get in right there for a short, that would be absolutely phenomenal. If you've been following me, you know that, this was the short position of the decade right here. I don't know about the short position of the decade, but this was a very easy short right here. And it's about, 18% down right now from the entry. So if it does pop back up, that's going to be another extremely easy short. So I will put this on just in case it happens to, I don't know, have a crazy, let's say it has a crazy spike up again like it had before, then I will short it, and I won't make that same mistake that I made the other time where I lowered some of my position. I got out of some of my position so that I could buy it back, so that I could sell more of it a little bit higher up. Like, that was really dumb of me. So this time, if it does come back up to 0.957, or I guess 958, that's when I'm going to be shorting it again for this trade. And so that, I think, is going to do it. We went through all of the major big top and bottom indicators, the fundamental indicators. Then we went through the total market cap, the dominance levels. We went through Bitcoin, Ethereum, Quant, Cardano, and then Solana right here. If Solana hits 55, I'm definitely going to be buying. And if it jumps back up here, I'll be selling. So yeah, we went through a whole bunch of stuff, and I gave a lot of like tidbits of information in this video. So I hope it was useful. I'm going to make a new one going through the different cryptocurrencies that are available in the, where is it? Right over here in the FTX perpetual swap stuff. So we got Aave and Alice and let's see, Atom, and a lot of other ones. Wow, Atom, is this Atom? Atom actually did really well. So if Atom comes down here, that would be a great buy. But yeah, actually, look at this. Look at how good Atom is doing. Atom is not in a bear market, that's for sure. Atom is literally just doing its thing. So that's pretty cool. But I'm gonna basically take a day and just go through all of these because it's pretty. I mean, it's useful. And if you're gonna short something, you might as well short, like I mentioned, the altcoins instead of Bitcoin. But like right now, right this very second, I'm not shorting anything because, it's like we're somewhat at support right now. That's why in the beginning I didn't sell. And so I'm gonna wait. So I'll go through these and then I'll make another update video. I'll make another video about that, and I'll post everything into the Discord group, into the VIP for everybody else. So hope you guys enjoyed it. I will see you in the next video. Keep on stacking those sats and protecting those gains. And yeah, see you in the next one. Bye.